Prices paid the highest since 2008 when the PCE index was over 4%. But what struck me among all that were the comments from manufacturers. And you have people saying like, things are now out of control. Everything is a mess and we're seeing wide-scale shortages. Labor shortages at suppliers are affecting material delivery and prices. We are so overloaded with orders and do not have the personnel to get product out the door on schedule. Prices are rising so rapidly that many are wondering if the situation is sustainable. Are we overheating in manufacturing? Should we be worried about implications for growth and inflation?
Well, as I've been on the ground in my district talking to manufacturers, you do see this situation. A lot of them closed down for a couple months last year. When we came back, the amount of excess savings in people's pockets led to people rotating towards spending on goods. And so there's been a lot of demand, and frankly, they've been behind the curve trying to catch up. And you know, when you're in a manufacturing shop, it's not as easy as saying, why don't you just open up another line? That takes a lot of money, it takes a lot of investment, it takes a lot of lead time. And so people have been, you know, working at 110%, but demand has just continued to be extremely strong for anything related to time at home, outdoor recreation, those kinds of expenditures. And so, you know, people are I hear the same thing you saw in that survey, which is the manufacturing sector is very busy and working hard to keep up. What that does for prices, I do think we're going to have price pressure in the fall, in the spring, because I do think we're going to have pent-up demand as vaccines are rolled out and warmer weather approaches. So I do think we're going to see that price pressure.
Well, some of your colleagues, including the chair last week, dismissed the bond market moves as basically a sign of confidence in the economy and said that the inflation moves we are expecting will be short-lived. But traders say it's not that simple, that yes, maybe at the longer end you have some of that, but at the shorter end, there's a lack of repo collateral. Overnight Treasury repo trading went negative on an intraday basis a couple times. Do you see anything in the markets that the Fed will have to address?
Well, I focus on some of the fundamentals. And, you know, if you talk about price pressure, as I said, we'll see that in the short term, not least of which because we're rounding over the next few months that were deflationary last year. So the 12-month numbers will look a little higher than normal. But inflation is a longer term phenomenon. At its core, it relates to expectations and what people expect prices to be. And I have to say, as I'm speaking to businesses in our district, I'm not hearing a sense of overwhelming desire or intent to be escalating prices beyond normal levels. So I think we will see some pressure, but I do still expect the medium and long term for it to be moderated.